Hi, good evening again. I think we're going to kick it off right now. I can see some familiar faces out there, so it's lovely to see you, and some new ones as well. So welcome again. Thank you for taking the time to join us this evening. We are going to talk about investment opportunities with Trius Lending Partners, who we are, what we do, and really alternative investments into real estate and what we have to offer our investors. So with that in mind, I'm going to go ahead and kick it off. Today, it's actually just myself. So you've got investor relations front and center today. So it's myself and then my colleague Gayatri. We'll hear a little bit more from her later, but we are the two. And really quickly, a little bit of housekeeping before we get too deep into it. We love for this to be interactive. We are happy to answer any and all questions. There is a Q&A button at the bottom of your screen. So especially while we're presenting, if something comes to mind, you'd like to ask a question, please enter it there. Once we get to the end of the presentation, we go through everything that's listed in the Q&A. And like I said, we'll answer any question. We've gotten them all in the past, and chances are we've probably seen it before, but we're not scared of anything you might have to ask, and we're happy to answer it as well. So again, Q&A box, and then by the end of the presentation, we'll go through anything that is out there. With that in mind, we'll kind of carry on smartly again. And kind of getting into background of Trius Lending Partners. So right here, you'll see three pictures. On the left-hand side is Mr. Steve Bond. So he is the chairman and founder of Trius Lending Partners. So back in 2003, Mr. Steve had actually retired after a full career in a totally different sector of business. And, he was retiring really during an interesting period. It's kind of funny because there are some parallels to what we're really experiencing today in so much as a lot of market volatility. So, we were coming out at that time really out of the dot-com bust, which had peaked 2001 to 2002, accompanied by large stock market losses, stock market volatility. And I think, Steve kind of was seeking an investment that would be far safer, more consistent, and one he would have control over. And that is really the so what of this. It's what we have to offer our investors still to this day. You'll see kind of throughout this presentation a lot of parallels and a consistency in our story of who we are. It remains unchanging. So in 2003, Steve started private lending. So he was using his own money to lend to real estate investors. Everything kind of what we would determine to be commercial real estate investing, defined as really non-owner occupied. So these are folks doing fix and flips. Maybe they're buying, renovating, rehabbing, and then even just refinancing and keeping that property, but all non-owner occupied. So on an individual level, Steve was lending out money, immediately recognized a great deal of success, and so much success that he was kind of outstripping his own personal funds. And so he started fundraising from friends and family. So really from there, Trius started to grow from that 2003 period onwards. And honestly, of course, it hasn't stopped. And here we are today. In 2017, the gentleman in the middle, Mr. Josh Shine, our CEO, he partners with Josh. He and Steve had known each other for a long time before that, I think over a decade at least at a minimum. And Josh also brought with him several decades of experience in the mortgage and real estate industry. So this is what he'd been doing since about 2000, and but really had, I think he'd worked kind of conventional mortgage, and I think he was seeking a little bit of a break from that. And so he joins Steve, and Trius becomes Trius Lending Partners, as it were. They continue to grow and do great things. And in 2022, you'll see the gentleman on the right-hand side, Mr. Steve Sless. So we have two Steves, never to be confused, right? But so Mr. Steve Sless joins, and he is our COO. He also, of course, brings with him several decades of experience from real estate as well. He had actually previously worked with Josh back when they were on the more conventional side. Another thing worth highlighting is that the story of Trius, of course, and we'll kind of get into it a little bit more, but it's really very much a story of safe, consistent returns for investors, really safe, consistent business practices and operations. And you'll also really see consistency in leadership. So that translates to how we continue to operate every day. Mr. Steve Bond, still very much his vision and his fundamentals of what we do are very much alive. And, again, our leadership has remained really, really steady throughout this entire thing. So what does that mean? A really consistent track record, of course, 20 plus years of complete principal preservation and no investor losses, and what that means in principal or interest. We are incredibly proud of that. Um, it's probably the most important thing to you sitting here tonight. And then, of course, consistent annual returns of 10 plus percent. The past couple years, when compared to the stock market, we would always joke that we were possibly the least exciting part of somebody's portfolio as the stock market had shot up. And now, of course, I think that's gained even more meaning to our investors as we are the least exciting part of their portfolio. It's great. We pay them on average 10% out each month on their money invested with us. And we have a bunch of really happy investors. We currently have 120 million in assets under management. So again, that story of 2003 to now, what Steve had created and began with his own personal funds has really grown to something meaningful, and a pretty big portfolio out there lent on the streets. Everything we do in terms of real estate, and we'll kind of get into it in another slide or two about what all of this means, because I know there's always a lot of real estate jargon. And again, if we ever say anything, you have a question about what was meant, please put it in the Q&A. But everything we do is always secured by first lien mortgages. So what that means is we're not allowing for any other liens against a property. We're running everything against clean title, and we retain first lien on any property we underwrite and lend against. We do a rigorous underwrite of both every single property we issue a loan on and also every single borrower. And again, we'll kind of get into that deeper, but it is the fundamental of who we are. We are safe, we are conservative, and we are really thoughtful in every single loan we approve. And of course, that also means that every single borrower has a stake in the game. So we do require a borrower down payment on every loan. And listen, there are a lot of private lenders out there. I think we distinguish ourselves in a lot of ways, but one of them is that, really requiring our borrowers to be similarly invested provides some of that, also that safety to the investment and safety to our investors as it relates to their investment with us. Finally, we're very straightforward, no fees or costs. So if you're looking to invest with us, once you invest with us and, we settle on whatever your rate of return is, that's quite simply it. There's no additional $395 a year fee. There's no additional 1.5% asset management fee. Some things that, quite frankly, you're seeing on Wall Street, and also are arguably not performing as well, even though they're still charging those fees. So we are really, quite frankly, simple. And I think there's beauty and simplicity today more than ever. So that's really a lot of like the who we are and our background. I'm gonna let G actually take over. Sorry, we always call her in the office G, but I'm gonna let Gayatri take over from here and kind of tell you what we do and how we do it in a little bit more detail.
Yeah, and thank you everyone for coming again. And we really appreciate you taking time to kind of get to know more about us. And just because Jess mentioned Wall Street, a little bit of background on me. I actually came from Wall Street. I worked in investment banking for almost 2 years. Decided I kind of liked real estate a bit more. So here I am, and also personally invested, as we know how the markets are going right now. So yeah, if that says something or a little bit, glad to have that help. And so, yeah, and again, like Jess mentioned, we do have over 2 decades of lending experience, which is pretty, that definitely allocates a lot of depth to what we're doing, and also have a deep understanding of the Mid-Atlantic market specifically. So, Maryland, of course, great core focus, but even outside of that, Mid-Atlantic. And one thing to note here is we want to keep it to the Mid-Atlantic area. This is kind of our expertise. And as we like to call it, like we are students of the Mid-Atlantic. We close almost thousands of loans every year just in the Mid-Atlantic. And this really has refined our ability to do underwriting, due diligence on any kind of loans that are coming through. So it's almost, yeah, like if you want any kind of investment in the Mid-Atlantic, we're your people. And yeah, and again, that also lends itself to being a safe and consistent risk-adjusted return that you're getting from us. It also goes into reputation reviews and investor kind of happiness. And yeah, and the ones we do select, the loans that we do select and approve on, we originate like in-house, we service in-house and hold all the loans in-house. So we do not lend on loans that we ourselves personally wouldn't take. And so Josh, our CEO, he's not presenting right now, but he is listening in on this call. And so I'll quote something. He loves to say, like, if I don't want it, I'm not lending on it. And yes, I've heard him say this as well. And this is why I'm saying it now. That is very much a principle that we follow. And over all the years that we've been operating, there hasn't been a single investor dollar lost to a Trius lending partner investor. So that's pretty incredible, and we really pride ourselves on that. And we definitely prioritize like investment security and safety, and we diversify it, but mainly we do stick to single family residentials. Yeah, and like we mentioned, we originate and service and hold it all in-house. And collectively, this brings almost 120 plus years of experience to the table. And there's been times like the great financial crisis in 2007 and 8. We weathered through that and actually came out as winners. And COVID-19 also was a time when we really actually came out strong. And looking at today in the high rate environment that we're in, and of course, with the volatility with the stock market and equities, this is really an investment that's more surefire in that background. And you can really kind of count on a steady return, whereas putting it in a place without so much of a steady return can be a risk today, especially. Yeah, and kind of I'll go on from there to also talk about several borrowers and our borrowers' history. Yeah, so we're very much relationship based. So we cultivate a strong repeat borrower base through offering them a fast, reliable closing process. And we also give them the ability to cash offers with a quick close. Now, but this also means that we do extensive due diligence on borrowers. So we are looking at things like credit score, income, bank balances, any kind of prior renting, real estate experience. We actually ask them to provide all of these things to us so that we can analyze it. We will just never lend to a borrower without knowing the full history, the full story behind why they're coming to us and what they've done in the past and their capability to pay loans in general. And so, yeah, we independently also verify every property that we lend against. So not just the borrower, but we're doing equally, if not also more diligence on the property itself, making sure that all permits are obtained, all kinds of paperwork. Of course, there's a lot of legal paperwork that goes behind closing some of these properties. All of that has to be ready and fulfilled for us to look at. And even then, we're looking at it, making sure that it's um, truly an investment. And so, yeah, and that also gives us that hands-on approach to real estate where we are independently overseeing every property, doing the underwriting ourselves. And oftentimes on all of these properties, we do get appraisals from third parties, things like that. But that's us as well as a third party looking at it. So we get almost like two opinions at all times. Um, and also our own underwriting is on the conservative end. We never want to overestimate and you know, kind of stick to the conservative scenario at all times. And we also lend on properties that we ourselves would personally own. And we also have an industry leading low 1.2% default rate, which is really exceptional. And this is all a function of everything mentioned before, like analyzing borrower credit score, income, assets, bank statements. So this is really how our business runs, but probably people are curious what this looks like and what our growth has looked like over time. So Jess, I'll let you take that.
Yeah, but real quickly, if you don't mind, before we move on, a couple of things. I've been here a little bit longer than Gayatri has, and actually, so her story is phenomenal. She's also in the Army Reserves, just good people. I actually was a borrower with Trius Lending Partners. I'd done 9 deals before. I love the company so much. When they had a position in investor relations open up, I applied for it, and obviously, luckily, got it. So I'm very excited to be here tonight. But kind of going back up to those borrowers, they really represent value. So the borrower experience a couple fold, as she mentioned, absolutely relationship based. It's evidenced by the fact that they come back. But as a borrower, and I can speak to it personally, that underwriting process really mimics similarly if you're going to get a conventional loan. So you really are required to submit all the same kind of documents. They are not skip and go and collecting $200. They are definitely getting their credit pulled. They are doing background income verification, tax records, any other real estate owned, because every borrower is doing a personal guarantee. And that's a huge, it's also really meaningful for our investors. We had actually a very experienced borrower got a call. They were about ready to list their house on the market this week. It was a flip. And they got a call on Sunday. that they're completely done and rehabbed house, had a tree go through the roof. And so how the story ends, because it's not an ideal story, but they are listing that house tomorrow because in Monday, Tuesday, Wednesday, they had everything done. They had the tree removed, the roof replaced, and everything is done. When borrowers come back, they bring experience, they bring relationships, they bring good general contractors, and so, well, today's focus is very much one of investors and the value we can present to you as a potential or an active investor. Because I see both here tonight, which is awesome. It's also a story, Trius is also very much a story about our borrowers. So I just, sorry, it gets me excited since I was one, and I kind of wanted to talk about that. But yeah, so 1.2% default rate, and if we'll kind of carry on smartly and actually look at what Gayatri had mentioned, which is really kind of our loan to value, our conservative underwriting, and really what we're lending on. So I think we've got another slide here. So over 90% of what we lend on are single family homes. So again, as I'd mentioned really on the outset of this, everything we lend on is commercial. But again, that's just really defined as non-owner occupied. So not Fannie Mae, not Freddie Mac, not kind of what you probably anecdotally are more familiar with. Um, but we will do a little bit, some smaller multifamilies, and really that's kind of once you start looking at 1 to 4 units. We are not doing ever lending on large apartment complexes. And as Gayatri had mentioned, we're also not lending in really exciting areas. So Florida at one point was looking really, really great, and Austin, Texas was looking fantastic. We're mid-Atlantic, and we kind of have a very tight lending bubble. We will also do some small commercial or small mixed use. What immediately comes to mind when I describe that is a recent property we lent on, and it was a flower shop on the bottom floor with 2 residential units right directly above it. So mixed use, a little bit of commercial, a little bit of residential, and multifamily all in there. The so what of that, though, is that anytime we do something that is slightly different than the majority, the bulk of what we do, single family lending, we actually tighten up our lending standards. Right now, across the portfolio, we have about a 65% total loan to value. What does that mean? That means that on average, for a property we've issued a loan on, in between purchase price and rehab, we've issued a loan all in for about 65% of its value. That's incredibly well positioned. It's super conservative. It's absolutely, again, we think we're an industry leader. We like to believe we are in a lot of aspects. This is one of them. Often, though, when we do something that's maybe small or commercial, even we've done a small strip center recently, the phenomenal borrower, we tighten that up even further. So, and you'll kind of see that that's the chart on the left. So you'll see some target and minimum and maximum loan to values. What that's really saying is we're hyper aware of what we're lending on. And if we're going to do anything that's just really a little bit different, then we make that more conservative. Instead of that average 65%, we might be having more of a loan to value around 55% all in purchase and rehab. And again, we will not lend above a maximum of 80%. I can tell you right now, I pretty much never see it. 70% is kind of, what our experienced borrowers, kind of where they land, but really we're trying to stay well under that. On the right-hand side, you'll see this graph, and it's sort of like, it's really a story of growth, but the emphasis is actually, and it's kind of also, I will say, it's shrunk to fit the page, and so it can look like a really impressive growth. And it is, please don't get me wrong, we take pride in that. But we have really tried to ensure that our growth is always steady, conservative, and supportable. And that everything that both Gayatri and I have kind of described up until this moment, that we never stray from any of those values, those fundamentals. So we're super excited. We hit 110 million at the end of 2024. And as I mentioned, we're at 120 million assets under management. A ton of that growth has come from existing investors. So maybe somebody starts with $100,000 and now they're at 1 million. It's a really huge part of our story, something we also take pride in. But we're obviously always, seeking to make new relationships and attract new investors as well. I will also note that actually a lot of our recent growth has really come from folks seeking to maybe diversify their retirement accounts. And we'll get into that actually in the next slide. I'm famous for getting ahead of myself, so this is classic. But we can, help with self-directed IRAs and all of that. And we've seen a recent uptick due to market volatility in investors seeking to kind of diversify some of their retirement accounts. And that's definitely been an engine for us. So with that, I'm going to stop talking before I take all of the fun. But Gotcha, you want to do the next one?
Yeah. So there's a couple different investment opportunities with Trius, and I'll start kind of with the first one here, which is note investing, and comparing it a bit to the other kind of overall option that we have, which is investing in a fund. So both the note and the fund, they're both against loans that are in a first lien position. So this means there's, yeah, so no fees, no expenses, and if anything, like you are always going to get paid. We're always going to get paid. So first lien position is such a good piece of security to have that not a lot of other real estate investment companies are able to offer, actually. So it's pretty unique to us. And each note in a note investment is secured to an individual loan. So there's a borrower coming for a loan, you would be kind of investing in that particular loan, whereas the fund is a pool of loans. So just a slight difference there. And with the note, the average payoff is around 9 months, whereas the fund is a 1 year commitment with an option to extend or reinvest your funds as needed or wanted. So yeah, and kind of with the note, that's a bit different there. And also different paperwork for the note. You get a different kind of interest income form. Um, and then fund is K1. And the note is open to absolutely anybody. So you could be accredited, non-accredited investor. Absolutely anybody can invest in notes, which I think is a great feature. And one thing I'd like to add here actually is I know we recently started getting a bit of diversity in terms of the type of investors we've been attracting. So there's some younger folks that might be on here too. And let's say you're kind of just starting out, you graduated college, you might be earning a good steady income, and you're looking to kind of put it somewhere and just grow it, then, you're probably going to fall into note investor category. And this is a great way just kind of to start your basic investment portfolio or add to whatever you may already have. So anybody out there that's kind of in that age group, like let me know. Happy to discuss and talk outside of this. And yeah, so again, the fund, it's open to reinvest dividend, and it also increases your internal rate of return. And for note investing, you can use your self-directed IRA for investment. So if you have a lot of money saved up in the IRA, it's a great way to also put a large sum of money and earn a higher amount on that. The fund is open to credit investors, but also here you have the ability to use your self-directed IRA as well. And so, yeah, and with the fund, I'll say the very neat thing about it is you do get a tax benefit. So we were able to tailor our fund to be in a sub-REIT kind of structure, or what they call a qualified business income structure. So you can actually enhance your tax equivalent yield. So the rate of return that you're essentially getting on whatever amount that you invest in will actually look higher or be higher when you get your kind of payout on it because of this tax benefit that's additional to what the rate is that you're earning. So yeah, and between the two, you might be looking like, oh, which one's better for me? Like, am I fund, am I note? You could be someone that actually even falls into both. And really what it is here is it's all based on kind of personal um, like personal
Preference.
tailorship. Yeah,
Yeah.
preference. Yeah, so whatever, a lot of people have different financial scenarios, different types of savings, where they have things allocated, what they're allocating towards, when they want to use it. All of this factors in, and we at Trius actually will help you kind of talk through it and guide you as to where to place or what kind of investment would be best for you.
Yeah. Yeah, to add on to that, I mean, you're literally right now talking to investor relations. So we're super accessible. And one of my favorite sayings is that personal finance is personal. In so much as everybody kind of has their own money story. And then everybody, what is happening to you personally at a, personal level financially right now, that is its own evolving story. I think we really take pride in being a part or an additive to your personal financial story, and we're here to help with that. So really, the so what of it is, retirement accounts, not note, fund. We just want to have a conversation, and then really, when we get to have an opportunity to learn our investors and our prospective investors, we are just here to help answer questions and make sure that whatever investment selection you make is most tailored to what you need. Are you most worried about monthly income. Maybe you're looking for something because you're approaching retirement. Are you most worried about tax advantages because right now you're in your high income years? And as one of our investors told me this week, he paid a hateful level of taxes this year. I just love that phrase. I paid a hateful level of taxes. Actually, with that in mind, if we could kind of keep moving a little bit more on the fund, some greater detail, because note investments are actually pretty straightforward. So, it's Jessica Franta takes $100,000 of 123 Main Street. She earns 10%. It's paid out 10% annualized, paid out monthly. So $833 comes to my checking account every single month. And thereafter, pretty boring and standard. But again, boring is beautiful right now in 2025. The fund, a little bit more nuanced. So just to give a little more, but again, I want to highlight that if you have really specific questions, we're here to answer them. It's literally our job and we love it. And so we're here all day. At the end, you'll actually get my personal cell. So the fund has $100,000 minimum investment, and it has essentially there's tiered returns. To Gayatri's point, the fund has a sub-REIT structure, which allows for tax benefits. So essentially your distributions and your dividends received, what you actually pay taxes on, those are different numbers. That's reflected on K1s at the end of the year. And then in addition, you qualify for the QBI, Qualified Business Income, which is a result of the 2017 Tax Cuts and Jobs Act. That's really also done at the individual level. So you receive your K1 at the end of the year, and then you and your tax professional, or before you submit your taxes, you take advantage of the QBI as well. Again, it can become pretty nuanced on the individual level, but the fund really benefits, quite frankly, everybody. It's great. As Gayatri mentioned, you can reinvest each month. A huge portion of our investors in the fund elect to do that. And then for, again, folks who really are in kind of those high income earning years, it gives you a little bit of a tax advantage that I know a lot of our folks are seeking. So I just kind of wanted to highlight some of that. And again, there's a lot of words on this page, but the so what of it is reach out to us, and then we're always happy to also answer more questions and kind of get you more paperwork and go through everything. And the final comment on this is they're all the same loans. They're all still underwritten by Trius, same processes, same safety, same security, because that's just really who we are and what we have to offer. With that in mind, honestly, no questions. That's always our favorite part of a webinar. Like, that's what we love the most. So I would absolutely love to answer any questions folks have. This slide kind of cues up some of our most common ones, how our investor returns generated are both equally safe. Um, very, long story short, we provide, and this also ties into a common question, like how does Trius Lending Partners even make money? Well, the simple answer is we are lending money at a certain rate and we're paying our investors an average of, 10%. So if we're lending at 12% and we're paying 10, there's obviously a spread there. And, I think and hope that we provide definitely lots of value to support that spread, but it's a pretty simple business. And like I mentioned, there's no fees. Um, as Gayatri mentioned, if you enter into the fund, another common question is, how long am I agreeing to have my money invested for? The fund, it's 1 year. And for a note, if you go on to 123 Main Street, it's right now they pay off in an average of 9 months. So it's really just the term of that note. We definitely are different in so much as I know there's a lot of straight REITs or specific tailored real estate investments, maybe to like large shopping complexes and stuff, and they'll have a 5 to 7 year term. Our investment does not have that same kind of hold period. So there's no hostage situations happening over here. And really, yeah, again, folks worry about, the default rate and everything. But again, I would reiterate, an investor has never lost principal or interest with us. And we have all the processes in place. If a borrower defaults on the very rare occasion, we internalize that. I guess apparently our favorite thing to do on webinars is quote Josh Shine. So I'll do it again. But we take some on the chin. That's his favorite thing to say. We take some on the chin. Once in a while, a borrower doesn't perform. It happens. We always go back and analyze what may have, gone wrong and what could be done better. But in those cases, Trius takes that loan back. Our investor, both in terms of process, but also financially, they don't feel that loss. So if it's a note, we get you paid out and hopefully get you just invested in a new performing loan. For the fund, the pool of loans, again, we just remove it, we pay it off, and we'll go ahead. We've got a legal team, and we have had to deal with foreclosures. We don't deal with many, but we know the process and we'll navigate it on our own and then ultimately dispose of that property, sell it or whatever. But we Trius Lending Partners internalize that. The investor, our goal really kind of going back to the very beginning of this, those same investors that Steve Bond first did some fundraising with, they're still with us today. So for over 20 years, they've been earning 10% on their money month after month after month. And we take great pride in the fact they're still here. And for anybody that's joining us, the hope and intent is that you'll be with us then for 20 years from here on out. So that is
Yeah.
it. No questions. Well, shucks. This is actually
Sounds
my information. That is my personal cell phone, the 202, a little DC area code for those that know. And invest at Trius Lending Partners. That's the best email because it goes to both Gayatri and I. So again, we opened it with thanks and gratitude for attending, and definitely want to close it also with thanks and gratitude for taking the time to attend. Please reach out to us. We'll also be in contact, and we will send you our investor presentation. Any questions you have, I reiterate, there's no silly question. And honestly, we're just here to help. We both love what we do. We're both investors, borrowers, all the things, and we believe in this very much. So with that in mind, we bid you adieu and have a lovely evening, and thank you again for joining us. Take care.
Thank you, everybody.